Alrighty, in today's video, we are going to be talking about what is going on with Phunware, with DWAC, PHUN. All of these stocks have been going parabolic, right? Looking at PHUN, you can see it has lows here at $2.65 and highs at $24. This would give a astonishing return of about 765% of value if you would have bought at the lows and sold at the highs, which is crazy. It's absolutely mind-boggling. So what is going on with this company? Okay, so this company worked with President Trump to develop mobile apps. And it appears that a lot of traders and investors are thinking that this company could play a role in the creation of Trump's new social network, Truth, because that is what he's planning on doing. So a lot of people are saying, hey, he worked with this company that creates mobile apps. They could be making a role in this company, which is causing this stock to go up 471%. And the craziest thing, right, is just as fast as this stock went up when it opened, it went up 215% in a matter of a couple minutes with a variety of circuit breaker halts and all those good things. And just as fast as this thing went up, you can see it tanked down to $5, falling 76% with a whole bunch of halts, with everything like that. And honestly, anytime a stock's getting halted, it makes it extremely difficult to buy, sell, because they pretty much say, hey, you can't do anything with the stock. If you're holding shares, you have to wait for the halt to be over with, and the average halt's about 10 minutes. So you got to wait 10 minutes. And in the meantime, people on the opposite end are saying, I got to buy it, which makes it very, very volatile, very, very risky to get into because of these overall spikes, right? You can make a lot of money, but on the flip side, just as fast as you make money, you can lose it. So it spiked up, sold off, and then it really just started consolidating and slowly moving its way up, right? Going from $5 all the way to $11, which is still a crazy return of 95%, but it doesn't look as big because of this massive spike. Went up that much, and then it just really started selling off, not doing much, and you can see just the massive downward trend. So right now, this is such a there's so much risk involved with this company in general. Another stock that went crazy is DWAC, Digital World Acquisition. You can see very similar charting. It went from lows here at 61, but if we actually go back and we look at the 5-day chart, you can see it actually has lows at $9, highs here at $175. So the return on this is a crazy 1,600% return if you'd have bought at the lows, sold at the highs. And you can see even this day right in here, this is still a return of about 350%, which is crazy. And the difference between these two companies and these two stocks is this one is merging with Trump Media to create that platform. That other company, PHUN, is more of a speculative. It's saying, okay, Trump really worked with this mobile app company during his reelection. There's a good chance that he could be working with them again. Maybe I should buy a couple shares in the hopes it does, because if we're right, this stock's going to go up even more, which is making a lot of investors in general turn their heads and say, hey, maybe I should get in on this. Maybe I should get on this. Okay, very similar thing with this, but this one is merging. It's confirmed that Trump Media is merging with this company to create that platform. And the platform is going to be very similar to almost like a hybrid in between Twitter and Facebook. And I think that's going to be really, really interesting, really, really cool. And in general, Trump had, 80 million votes. So if that just say half of those people actually turn their heads and focus on this social network, that's 40 million users on this platform like that. So I definitely think there's a lot of possibilities. But right now, with it being so small and such a higher risk investment, is it worth it? Now, I always think a good solid strategy for all these higher risk, higher reward plays would be dollar cost averaging. So you almost get a little piece of that pie in the hopes it continues to go up. You're still going to make money, But the beauty of it is if it sells off, all you're doing is you're just averaging your shares down. So once it recovers, you make a lot of money. So right now it's definitely a higher risk, higher reward play, but there's still a lot of possibilities on what this thing can do. I wouldn't be surprised if this thing sells back off to about $60, but also in the meantime, it could easily spike back up to the highs here at 175. There's just a lot of speculation. There's a lot of volatility. There's a lot of risk involved. And I'm honestly super excited to see where this thing goes. But guys, that is it. I hope you guys enjoyed the episode. And if you did, hit that like button, subscribe to the channel, and we will see you guys later. Remember to stay happy, stay positive, and stay safe. Take care.